Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. My victim of the day is Blaine Monaghan. He's the CEO of Fremont Gold. Now, I've known Blaine for quite a few years, more than I care to admit. He came up on my radar with the Camino Rojo story in the previous decade, which was a fantastic discovery that actually worked out very well for my readers at the time. And I give Blaine credit for bringing it to my attention. And now Blaine is working on a new gold play in Nevada called Fremont Gold. So Blaine, why don't you tell us what you're doing? And of course, I've got questions.
Sure. Well, I look forward to the questions. So yeah, the Camino Rojo discovery, I'll just back up a little bit. That was a new discovery back in 2007 by Cam Platts, who I was working for at the time. A great brand new grassroots discovery. Geologists driving down the road noticed the road surface color change from a chalky white to a rusty reddish brown. They asked the locals where the material came from. They were directed to a small pit. They staked it, and 3 years later had outlined 4 million ounces gold and a takeout by Goldcorp for over 300 million. So it was a fantastic new discovery. And, that's really helped me in essence. When I first started in the business in 2001, I worked with Wheaton River Minerals, which merged with Goldcorp in 2004. So I've worked with quite a few companies since 2001. I've worked with 12, but 5 of them have been subject to M&A, like Camplat. So I've been fortunate to have worked with a lot of good people, with a lot of good companies, and I think that gives me a bit of a leg up in understanding what it's going to take to be successful. And that's why I took the job at Fremont. So this was, I took over Fremont in the fall of 2018. I like the jurisdiction. I mean, we all know mineral exploration and development is tough enough, let alone adding in the layers of political risk. So, the jurisdiction really appealed to me. I like the team. I think we have a great board and management team and a very strong advisory board. And, really, one of the most important things for a junior exploration company, and I'm sure this will be a question that might come up, is your G&A. I mean, our dollars are precious. And one of the advantages, let alone the geological potential and the infrastructure and the rule of law in Nevada, is its proximity to Vancouver, where a lot of us smaller junior companies are based. And I can't tell you how easy it is really to just be able to hop on a direct flight to Salt Lake City and pick up a rental truck and drive to your property that day and stay in a motel that night. It really helps keep your costs low. Makes life really easy. So that's one of the reasons why I like Nevada. Fremont Gold more recently, last year we were on a project acquisition hunt. We were looking for advanced stage gold projects, so projects that had the potential to host at least 1 million ounces gold, that had relatively easy terms, and also where we had the opportunity to acquire 100%. So the first project we acquired was Cobb Creek from Contact Gold. And the last project we acquired was Griffin, which we picked up from Liberty, and that's our flagship. So Griffin is a past-producing gold mine, a Carlin mine. It last produced in 1998, and it hasn't been drilled since then. So it's been permitted, it's bonded. We raised some money in February, thank goodness. So we have a fully funded drill program about to start up next month. And the other great thing about being in Nevada, mining and exploration is such an important part of their economy. It's been deemed an essential service, so you can still conduct exploration and mining with just appropriate safety measures in place.
Okay. Well, I've got questions about Griffin, but before we go there, back up a second. You said you were attracted to the company based on the potential it had, but then you just said that you went and acquired a bunch of new projects. So what happened to the old projects? Was the potential there, and why did you buy new ones if there was good potential there?
Yeah, that's a very good question, and I have answers for that. So when I first took over from Fremont, we had some earlier stage gold exploration projects. We also had some more advanced stage gold projects, Gold Bar and Gold Canyon, and these were surrounding and adjacent to McEwen's Gold Bar. And, I understood the rationale at the time. If you have success, you have a logical takeout partner just up the road. It would make sense for McEwen to acquire these assets if you had success. We did raise some money. We did drill the projects. We had a modicum of success, and frankly, when I really looked at the data and I looked at the potential upside and the amount of money we had spent and property payments coming up, I just didn't think the projects had enough potential to continue to spend more money on to generate the potential returns that shareholders of junior exploration companies are looking for. So we exited the Gold Bar camp, we dropped Gold Bar, and thankfully we were able to sell Gold Canyon to McEwen. So we received about 300,000 shares of theirs back in August of last year. And then we were left with those earlier stage projects again. And I knew, and it continues to be the case, that it's very difficult to fund early stage exploration projects. So I wanted to go back out there and acquire some more advanced stage gold projects, but ones that had the potential, if you had success, that there could be multiple bidders. And that really just wouldn't have been the case at Gold Bar and Gold Canyon.
Okay, that makes sense. So that brings the logical question, particularly for Griffin and Liberty. If those guys know what they're doing, that's a team with a great deal of success. If this project was any good, why would they sell it to you?
Because they never drilled it. It's a great story, really. So, I mean, Griffin was a relatively new discovery. It was discovered in the early 80s. It was first drilled in 88. It really didn't see too much drilling. It only saw about 214 drill holes, and almost all of that was focused on delineating the two deposits that Alta Gold ultimately mined. They had operational issues at another asset. The gold price was collapsing in 99, so they went bankrupt. Forestry came in and reclaimed it. It didn't see any exploration work until Pilot, the predecessor company or former name of Liberty, picked it up in 2012. Liberty did a lot of good exploration work. They did the mapping, they did the soils, they did the geophysics, they permitted it, they bonded it. And if you were to look at their materials dating back to that time period, I mean, it was one of their more highly ranked properties. But frankly, then they got distracted by Kinsley. And then after Kinsley, Gold Strike, and now they're 100% focused on Black Pine, and they're having great success. And if you were to speak to Cal at Liberty, he's convinced they're going to be acquired, and he's probably right. So he is essentially divesting of all of his non-core assets. And of course, Griffin would have been one of those, and he's looking to do a deal with Kinsley on Berrien. He sold his Turkish assets. So this it was a highly ranked property of theirs. They were getting ready to drill it. And frankly, their attention got distracted to other assets, and they never got around to it. And frankly, it didn't make sense for them to pursue it now. So it was an excellent opportunity for us. It really ticked all the boxes.
Okay. So given that most of our audience is not geologists, can you explain in a simple terms your Black Rock Fault thesis? What is the target? What are you trying to show there? What do you hope to deliver the market there at Griffin?
Yeah. So, I mean, the Griffin was a Carlin mine. It's Carlin-style mineralization, and you hear about that a lot in Nevada. So we're not in the Carlin trend. We're in the Cortez trend, but that also hosts Carlin mines, and we're at the very southern end of it. It's probably pretty much the last known deposit or mine associated with the Cortez trend at the southern end. What you're looking for here is when it was in production, this was a very simple open pit heap leach operation. Essentially just a big hole in the earth, and you're scooping out the mineralization. You put it through a one-stage crush, you put it on a heap leach pad, you sprinkle a solution through it, and you collect your gold. So these can be very, very attractive deposits as long as you have favorable metallurgy, good recoveries, which Griffin did also. So our thesis really at Griffin is that we're just looking for a lot more of it. So when you look at the different types of targets we're looking to test at Griffin, I think the Black Rock Fault hosts a tremendous amount of potential for another deposit or deposits along this long regional feature. It's more than 3 kilometers long. There's extensive jasperoid development, which is something a lot of miners look for Carlin-style mineralization. It's seen very limited drilling, and why we think it has such good potential, if you're to look at a cross-section of the Discovery and Hammer Ridge deposit that they mined out, the favorable host horizon dips underneath that fault. So our thought is that somewhere along this fault, there's potential for another deposit or deposits. So that would represent just one of the targets we're excited about at Griffin. It's long. We won't be able to test all of it, but we do have a few sites selected for drilling in this program.
All right. Is there any thought that the fault itself might be a conduit? Could there be a feeder zone somewhere along there that would make for a higher grade story?
Yeah, absolutely. I mean, there's mineralization here is associated with structures. There is some structural control to the mineralization. So not only is there potential for this horizon to be mineralized, or portions of this horizon to be mineralized along that Black Rock fault. It could also be within the fault, and there could be higher grade structures in and around the deposit areas also, or to depth.
All right. So your targets that you've defined now, is that based on surface soils, geophysics, both coincident targets, or what are the odds on hitting on any of these?
Yeah, all of them. So, I mean, that was one of the great things, as you mentioned, when you're talking about, I mean, well, if Liberty liked this, if they sold it to you, they might not have liked it so much. One of the great things about picking up a project from Liberty, as you mentioned, these are first class explorationists. We can trust all the data they generated for Griffin. It's first class, and all of the targets that we're looking at would have been generated as a result of the work they did. And it would be a combination of all the things you mentioned, both soil sampling, geophysics, mapping, et cetera, and obviously the previous drill data and previous exploration work that Alta Gold would have been carried out. And one of the other advantages we have when we were looking at putting together this exploration program is our team itself. I mean, Clay Newton, he's a PhD structural geologist. We brought on Andy Wallace to the advisory board last year, who I call Mr. Nevada. He's with Cordex. He's been behind 9 discoveries, 5 of which are still in production today. And more importantly, more recently, we brought on Jamie Robinson, who was the former exploration manager for Alta Gold and was behind one of those discoveries at Griffin. So we had Clay come up with the exploration plan. We had a very long conference call with myself and Clay and Andy and Jamie and another member of the board, and we really pulled it apart and looked through it. I wanted to make sure that the exploration plan we put together, when we put it in front of Andy and Jamie, it also made sense to them. Mm-hmm. I didn't want to go out there and pursue targets that had already been tested or discounted. I want to make sure we spend our money wisely, and I have a very high degree of confidence in the exploration plan we put together. Couldn't have been compiled by a better team.
All right. And you just raised, as you mentioned, thankfully for you, right before the coronavirus shutdowns and all this madness. But you just raised about $1.5 million. It's not a whole lot of money for a big drill program in Nevada. I mean, but it'll get you some holes. What do you expect to be deliverables for that amount of money in this season?
Sure. Yeah, I would have loved to have been able to raise money at higher prices. And this is something my wife always laughs at me. I'm a pretty optimistic guy, but sometimes I do like to cry in my cornflakes when I was talking about the unit price. Because we picked up Griffin so late in the year, I would have loved to have had more time to market the story, because I felt with Cobb and Griffin and our team and being in Nevada, that the company should have been worth more, but we didn't have that luxury of being able to wait before pulling the trigger on a financing. So it's a pretty attractive financing. It was a 6-cent unit with a full warrant at 10 cents. And I think based on those things I mentioned, it was a very easy sell. So we went out there initially looking to raise $1 million. We increased it to 1.5 and closed it in a matter of weeks. That should see us through into Q4. When you're looking at our budget for Griffin, we're looking at a 2,000 meter program in approximately 10 holes. There could be some more leeway in that, but that's just what we're communicating to the market at the present time. And we've budgeted all in for that program, the 2,000 meters of drilling, the geologist time, road construction, et cetera, all in assaying 400,000 Canadian. So we'll get through to the beginning of Q4 with our current treasury. And I'm hopeful, and I think it's going to happen with the current gold price environment, where Fremont is currently trading. With the start of drilling and drill results, we should be able to get the warrants in also, and they're 10-cent warrants, and that would bring in $2.4 million. So we'll see what happens there, but I think we're going to have success, and I think we'll be able to get those warrants coming in, sometime this summer.
Sure. Well, I could certainly see, if I were in your shoes at the time, 6 cents. The more you raise, the more you dilute. So how much do you raise versus how much do you want to drill? I'm glad that I wasn't in your chair at that time. But boy, in March, when things fell off the cliff, you must have said, thank goodness we raised that money.
And that's exactly what my wife said.
Mine would do the same.
She's a smart lady, so there we go.
There you go. Okay, so you've got money to deliver. Your primary hypothesis gets tested this year, and you mentioned you had about five or six targets. So that's like one or two holes for each target to test them, or is there one area you're particularly keen to?
Yeah, I'd say that's fair. I mean, we talked about the Black Rock Fault, so that's one of the targets. There's going to be at least two holes there in different spots. So, it'd be great to be able to walk in there with like a 10,000 meter program to really do justice to all these various targets. And you still wouldn't be doing it justice because there's other targets we'd like to test that we can't presently permit or not in the permitting plan. But Black Rock Fault is one. You'd be looking to test some geochemical targets that haven't been tested. And there's also, the low-hanging fruit. So prior to Alta Gold going bankrupt, they were looking to expand operations at the Hammer Pit. And if you were to plug in, the unmined mineralized intercepts to the southwest of the Hammer Pit, you would come up with, a half decent little resource there. So, I mean, we'll be drilling into that area too.
I was sorry. Let me jump in on that. I was wondering about that because you do have a historic resource at Cobb Creek, a small one, but there's something there, but not here. But they went out of business, so presumably they had ore left in the ground that they were ready to blast when they pulled the plug on it. Is there anywhere a historic resource? Are you at liberty to say there might be this much left behind?
Yeah, it would be very easy. I mean, you could plug in these unmined mineralized intercepts into Leapfrog and come up with a small in-house resource. But I don't want to put out any sort of number that I don't think comes close to representing its potential. I don't think that's wise. I don't think it's worthwhile. I'd like to get out there and do a lot more exploration and look to build a bigger global resource from not only in and around the pits, but some of these other targets also. I mean, I think what Alta Gold did is that, they were focused on production. They did a limited amount of regional exploration work. I think they really just scratched the surface. We think we have something that's potentially a very big system, and it needs to be adequately explored, and that's what we're looking to do.
Okay, well, yeah, fair enough. If you publish a small resource, then you can get pigeonholed and everything. Oh, yeah, that's small, right? And they don't even give you a second chance. All right. Well, are you going to do anything with Cobb Creek then this year? Is there one drill get maybe sent over there to follow up, or is that just too much for 1 year?
You know what? I'd really like to do that, but I think Cobb is, at the stage where Griffin was prior to Liberty picking it up. So a lot of historic data, some drilling. There is a historic resource. There's a number of targets. Some targets have been tested and returned anomalous values and weren't followed up, and some of the targets remain to be tested. But I think what you need to do at Griffin is what Liberty did at Griffin. You need to go back in there. When you look at the resource right now, it's a different style of mineralization from what we think the property really has potential for. We think it is a great environment for the discovery of a Carlin type deposit, like something you might see at Griffin or in the Carlin trend. And that's not where the historic resource is right now. So I think you need to go back in there with that model in mind and go back to the basics and do your mapping and do your chip and your rock and your grab and your gravity survey and outline the targets you think have the best potential for Carlin type discovery, and then start the permitting process. If we had raised, even just another $100,000 or $200,000, we could have done that at Cobb. I mean, that program at Cobb would probably be about $100,000. But I want to save that money right now for Griffin.
And you don't want to end up scraping the bottom of the barrel. So,
Exactly.
But still, all right. So, frankly, you still don't have a lot of cash here. You're not flush with cash. So the plan is get some initial good results. If Mother Nature cooperates, and then on the back of that, raise at higher prices, and then off to the races. Hopefully, that's the hope.
Sounds like a plan.
All right. And the earlier stage projects. Well, if you're not even going to do much at Cobb this year, then those are all just backburnered. I assume, is that right?
Yeah, I mean, there's one project I really like on the early stage side. It's very high risk, but the rewards could be fantastic. And I do refer to this project from time to time just because I think it's a first-class exploration target, but it's really a risky target. I mean, it's a bit deeper. And this is in North Carlin. It's right at the northern end of the Carlin Trend. I mean, we've done some of that early stage exploration work, the chip and rock and grab and soils and some geophysics. And there's most certainly a target there. It has the potential for a Carlin type deposit and for a low sulfidation epithermal type deposit, but it's probably a bit deeper. And if you have success, you're a hero. If you don't, you're a zero. But I mean, it's the sort of target that if you have success, my analogy for it would be gold standard. I mean, they were exploring at the southern end of the Carlin Trend. No one thought they were probably going to have much success, and lo and behold, I mean, at one point in time, they got up to a $500 million market cap just on that. So, that is the nature of exploration. If we were flush with cash, I would certainly dedicate a small drill program to North Carlin. But it can't be the focus, but it would be a great one that you could say, yeah, we're going to stick a few holes in it, and if we have success, fantastic. If not, that's fine.
Well, yeah, that's the sort of thing that I think you're better off doing when you have success somewhere else. If you Absolutely. Make it at Griffin and people are excited about Griffin, then there's no downside. You can kill North Carlin and it won't matter to the story. But if you do have success, then that's even better, right?
Exactly.
So okay, all right. Is there any thought with all that you have on your plate? I mean, it sounds like you've got some pretty good targets here. Is there any thought to maybe bringing in some JV partners and trying to pursue the prospect generator model?
No, not at the present time. I haven't talked to corporates. I haven't approached them. I mean, they are in the Rolodex. I know who to talk to, but I would like to be able to give it the first shot, see what we get. And there'd be a lot of different logical partners. I mean, that's the other great thing, obviously, about being in Nevada is that, if you have success, you're on everybody's radar screen. And so, I mean, I think Griffin has outstanding exploration potential that really hasn't been adequately explored. And we're going to be the first ones to get in there and drill it since the late 90s. And I'm very excited by it. And I want to give our shareholders the first chances to success.
All right. Well, speaking of shareholders, I always ask everybody who ventures into the pit with me about your skin in the game, sir.
Yes.
And I noticed on your presentation it says insiders and management own 17%. But how much of that is, cash skin put into the game versus options you got for signing up? How much of your own money did you put into this, sir?
Yes. Well, I'll break down our shareholders a little bit. So yes, management insider 17%. The founder and current president, Dennis Moore, is the single largest shareholder with about 5.6 million. He's bought 2 million of that in the market. I came on in October of 2018, and since I came on, I've purchased just over 1 million shares in the market. Actually, I bought another little bit just the other day, just for fun, because I was annoyed by the share price. So yeah, I bought 1 million in the market, combination of private placements and in the market. My average price is around the current share price.
Well, I like to hear that. That aligns your incentives with any potential shareholder. I'm a potential shareholder, and if you wouldn't put your money into it, why should I put my money into it? So
I agree.
Hats off to you on that, and thank you for being a good sport with some tough questions here. We look forward to seeing
those
what
were your
the
tough questions? Oh my goodness.
We could get into the weeds with the rocks, but there's no point. No, given what you're doing, no, those are my tough questions. If you had a deposit, I could pick at its technical. If you were building a mine, I could ask more about the metallurgy or so on. But you're pre-discovery here, so how are you going to deliver for the shareholders is really what I want to know. And are your incentives aligned with shareholders? And you have answered both those questions.
With the affirmative.
Right. Well, so keep us posted and good luck.
Thanks very much. Have a great day.